the two amigos ride again.
It's been a while.
It's been a while, man. Whenever people are probably alarmed. Whenever people see you and me doing lives like this, they're probably thinking, "Shit, Bitcoin's gonna tank again. Bitcoin's crashing again."
Yeah, they're probably getting out their phones, checking prices right now.
Yeah. Okay. So yes, everyone's asking in my chat about the land sales. That's what we're here for. In about 10 minutes to 15 minutes, we should have on Adam Dem. Yes, Adam just replied to me. He says, understood. I'll be on in 10 minutes, 15 or so, because me and Brian just want to set up the show, talk about where Bitcoin's going, where the market is going, and then we set up, Adam Dem. So for you guys who don't know, Adam is basically the founder of Victoria VR. Could you tell us what Victoria VR is, Brian?
Yeah, so as everybody knows right now, metaverse is huge, and there's this huge land grab for the metaverse. Who's it going to be? Blocktopia, Sand, all these different, and everybody doesn't really know what these are all about. We're all new to it, so it's hard to tell who just showed up yesterday and is trying to make a money grab and just get in and pretend they're a metaverse, because pretty much every project launched now says they're a metaverse, and who's actually been here a long time. Well, Victoria VR has been building their metaverse for several years before metaverse was even a thing, before it was even a big deal. These guys have an office, they have infrastructure, they have an amazing project that is more diverse and more well thought out than just about anything I've ever seen. So the message here, since we don't have hours and hours to talk about it, you could easily talk about Victoria VR for hours. But the message here is that these guys are the real deal, and they're here to stay, and they've been here for a long time.
Yeah, well, so the thing is, I thought that, Victoria, it really surprised me. So, for example, like Brian and I both invested in the coin. We were never paid, and including this interview, we were never paid, and they didn't know us. I mean, there was a middleman, that was Delmaker, as most of you know. But what happened was basically, it launched, and it was launched at a market cap of 50 mil. We're like, oh yeah, that's great. Usually it does about 10x. This one did about 170x. We couldn't believe it. We thought, okay, it spikes up. Usually would fall right back down. And then we're like, okay. But this one stayed right up there. It stayed around between 170x to 140x. And it was absolutely crazy. So we're looking at it and thinking, this is a pretty, we're wondering how long this was going to keep going for. And it's been more like 4 weeks now, 4 weeks exactly. 3 weeks exactly. And basically Bitcoin has crashed since then, and VR has stayed up. We are very surprised. That's what you call relative strength. It's kind of like if the SP 500 was stock market crashing, and basically if Bitcoin stays up. So that just goes to show you how strong this project is. Initially, I mean, we can never tell which one is a really great project. There are some of our favorites, but sometimes the market dumps on them, like Lossless. Me and Brian both really like the project, but and it's gone up a lot. It's gone up like 16x in the last, a month ago, and then it dumped a lot. So sometimes you can never tell. But this one, we're like, yeah, this is a good project, but we didn't expect it to 170x. So we're going to be talking to the founder sometime soon, and yeah.
Yeah, so let me show you guys real quick the way they're. Let's see. It's been so long since we've been live. I don't even know if I remember if I can flip my phone around here. Yeah, here we go. So this is the Victoria VR Island where their land sale will be taking place, and they basically have it divided into a city, which is more of an urban center, and then within that city, you can see they have futuristic, cyberpunk, historical, and green districts inside the city. And then they have more of a rural outlying areas, kind of, mimicking any nation or any country, that are going to be more for resources. And within those districts, they have wood, fire, earth, metal, and water. And I mean, the cultural elements of each one of these areas are totally different: futuristic, cyberpunk, historical, green. So you could sort of decide, what culture you want to be a part of. A lot of you guys might not also know that Victoria VR is the only photorealistic metaverse What does that mean? It means if you look at a lot of the other metaverses, they basically look like Roblox or like Minecraft or something. There's nothing wrong with Roblox and Minecraft. I really like Roblox and Minecraft. I play them with my kids, but it's hard to imagine, a lot of adults spending a whole lot of time in Roblox and Minecraft with these boxy little characters. So Victoria VR is actually making a realistic metaverse. And as usual with something of this scale, it's going to take a while to build out, but they have a very strong economic vision with their token, I think, which is why their token is staying so strong right now. They've actually really thought everything through.
Okay, so a few questions are asking about, is it worth buying the VR token right now? Personally, it's never 100% when you recommend a token, but the thing is, just think about this. Basically, everybody expected it to basically come back down, and it didn't come back down after a huge spike up. And then when Bitcoin crashed, then everything came down like 20 to 50%, like Ethereum, Solana, AVAX, even the strongest projects. And this one didn't come back down. So I would say it's a strong project. Just put it that way. Like, I don't want to be giving financial advice, but I guess I can say if something's strong or if something's weak. Because, if I say, oh, yeah, this is great, and buy it, and then, and it crashes, then people are going to be complaining. I just wanted to show you guys this. So basically, this was what I was talking about before, and this is the SP 500 chart. Now you notice that these two, it's been traveling in between the blue line, the upper resistance and the lower support, since that was back in March, April 2020. And what happened is basically you can see how well that this trend line has held. I wonder if I flip it on the side, would you see it better, or is this weird for everyone? So you can see how long it's been, basically entire pandemic, it's been holding. So every time, and Brian's been pretty amazed when I called this a few times, like about just before the crash, I said, hey, the SP 500 is coming into trouble. It's hitting upper resistance around there. And then we had that crash, and Bitcoin crashed huge to 42K around there. And then basically 4 days ago, I said, hey, it's hitting that bottom support. It's going to bounce up. And then we had 4 days of bounce. So the thing is, it's not magic so far. It's just that it's very well-defined channel. And you can see so SP 500 has been respecting that every time. Now, when it breaks, it should be a breakdown rather than a break up, because it's very difficult to break up and go accelerate. Chances are it's more going to go down. So if it breaks down, chances are then we're in trouble, because this support line really needs to hold. And with the last 4 days of rebound, I just want to show you guys something. Can you see that volume has just been declining pretty sharply as price rallied higher and higher? Last 4 days, volume has just fallen off. So you could say that, again, maybe it's just before Christmas, no one wants to trade very heavy. Well, then I would say also that don't take that price action too seriously. I mean, right now you could say that SP 500 is right near all-time high again. It's not quite there, but it's almost there, almost there. In fact, it's probably in terms of closing, it's almost if not the highest close in SP 500 history. But just keep in mind that that's a very weak volume. It's falling volume all the way. So I wouldn't trust that very much. What does that have to do with Bitcoin? So basically, as you probably notice, every time the SP 500 tanks, Bitcoin gets affected unless Bitcoin is in a really strong mood. So this is Bitcoin, and you can see that basically they started falling around the same time. What shocked it was the inflation report that came out this day. The 69K exact top was the day when the inflation report came out, shocked everybody, and started falling. So then basically we've had 4 days of rebound, but you can see that I would say the SP 500 has been rebounding harder. Also, the Bitcoin volume, in my opinion, is a little bit problematic. Not to say that Bitcoin can't go higher, but you can see that again from this day at about 45K, it started going up. Right, we're now at 51K. And I did say, yeah, basically, if you've been watching my videos, I drew a little wriggly red line. I said, yeah, it's heading up to about 51, 53K area. But however, just look at this. As it's been going up, volume's been going down. Especially this big green candle we had yesterday. I'll blow that up. Just have a look at this. As everyone was showing yesterday, as Bitcoin made this big move to 51K, volume was actually kind of very sedate compared to all these other days. So look at that. Just be very careful. I would say we're very likely to retest 47 to 48K very soon. That's my opinion. Doesn't mean it's going going down to like 42K or anything. But I would say in the next 24 to 48 hours, if we test 47K, 48K area, don't be surprised, because I think it would not surprise me anyway. So that's my quick catch up for the market. Any thoughts on that, Brian?
Yeah, it's interesting because I turned my stocks on for the first time in like a month because I'm all in crypto right now, so I forget about my stock portfolio. But there's a similar thing happening in crypto and stocks, which is people are still wanting to stay invested, but they're wanting safety and something that's more predictable and valuable. So some of the crap coins, if you will, whatever, are kind of fading away. And it's sort of the same thing in the stock market too, where more questionable growth stocks that have insanely high PE ratios and they're basically moonshots, people are rotating. It's called a sector rotation into industries that are they're a little bit not necessarily just safer, but also have more proven value. They have some income, they have some revenue, they're not just dreaming about the future. And people are also going to be looking for more income and return as interest rates go up for several different reasons. There's some mechanics in there that we don't need to go into completely, but that's sort of happening. And I think in the crypto markets, because you guys are all here to talk about crypto, I think that's probably what we're going to see in the coming months is continued growth, but it's going to be rotating into projects that have proven themselves more, and people are going to be doing their research better, because once you get burned a couple of times by picking a crypto that looks so flashy, they've got a great website, oh my gosh, look what they're doing, right? But then like their price drops 80%, you're going to go, next time I actually should probably research this company a little bit better. So I think that real research, real utility, real functionality is going to be the name of the game now. And that's just kind of typically the way that it works when we have these little shakeouts. And I mean, you see Bitcoin down 10 or 20%, but some of the coins over the last month have been down a lot more than that.
Okay, Brian, did you just say that the smaller coins are down a lot more now? That your whole point just then was that the small, riskier coins with no real utility, like Santa, are down a lot, whereas the useful ones, such as what I've noticed is AVAX, Solana, Luna, leading the charge. Is that the point you were making?
Yeah, and size being secondary to utility. So the ones with the proven utility that are actually doing something. That's why, I mean, we talk about lossless so much on here. Pablo and I have invested in lossless, and we're not getting paid. We never get paid to talk about lossless, but that's why I keep coming back to lossless as being such a good value right now, because they're actually building something and deploying products in an arena without much competition, and their market cap is still so low. So if you're sick of hearing about lossless, that's fine. We think it's one of the best projects out there, but just look for projects that are like that are moving and shaking, doing things, building things, and have sort of been under recognized for what they're doing.
Okay, can I show you guys something? Judging by what Brian was saying, so sometimes people wonder why the Bitcoin crashed this time. It was to people like us who study macroeconomics, it's pretty obvious. It crashed twice, basically on the inflation report. So essentially, Bitcoin, if you look at, you can go back and check this, but Bitcoin crashed essentially once in May, that famous crash to 30,000, right? To 30,000. This day is when 10th of May is when, because usually the inflation report comes out on the 10th or the 12th, depends if it's a weekend or not. On the 10th of May, the inflation report came out. It was like 4.5% or 5%, shocked the market. Bang, they thought interest rates were going to go up, right? That's the first crash. And then we were there. Now, this second time, basically, inflation came out to be 6.2%. 10th or 9th of November, and then boom, we hit 42, and we're still going sideways here. So there's a lot of similarities between this period and what caused it, and this May that oh damn it, one second, and this this May crash down and going sideways. Now here's the thing. So basically, if people have learned something, people used to think Bitcoin is a short-term inflation hedge. In the short term, inflation is probably the opposite of that. So let me just flip my camera. So in the short term, Bitcoin is probably, I mean, every time when there's high inflation, Bitcoin crashes because interest rates are going up. That's as simple as that. So maybe Bitcoin's a inflation hedge in the long term, but it certainly isn't in the short term. So then the question is, if Bitcoin is not a short-term inflation hedge, like what Plan B tells you. By the way, I've changed my name to Plan A. Pablo, he means Plan A. So then what is Bitcoin? Well, my theory is this. Bitcoin, and it's not my theory, but a lot of Wall Streeters believe this, Bitcoin is actually what they call a risk-on asset. What's a risk-on asset? It's what Brian was saying. Basically, when coins like Santa, when shit coins, when coins that that don't have a lot of utility are doing really well, or really small risky coins are doing really well, it's called risk on Wall Street. So I'm just going to show you guys this. See, this, it says it's SPY divided by RUT. SPY is the SP 500, right? The spider. RUT is the Russell 2000. So that is basically the your SP 500 index. It includes, companies like Nike, Reebok, McDonald's, Coca-Cola, Facebook, Netflix, all those. Russell 2000 are those tiny, not tiny, but they're the smallest 2000 stocks in America. The ones that you can't name, but they're there. So look at this. SPY divided by Russell was falling all the way here and hit a bottom in March this year. March, very close to April. What does that tell you? That says Russell is gaining in strength and Spider, the SP 500, is falling in strength. What does that tell you? That means the market is risk on. It means basically the small stocks are gaining, the large stocks are falling. So if we look at what happened between, say, this is April, from April to almost April, right? April to April, you can see that, right? It was risk on. The SP 500 is falling, Russell is gaining. Okay, look at Bitcoin. Look what happened to Bitcoin from April to April. I'll put it in a log chart so we can see it better. So this is April, right, of 2020 to April, right? Do we see it now? Risk on. Now, when we look at Spider and the Russell again, what has been happening since then? It's obvious uptrend. And there's a spike in the uptrend since, what is this date? November 8th, right? That's when the inflation report came out. Do we see that? So basically, since April, Spider has been gaining against Russell, which means it's more people are investing in the big stocks like Netflix, like Nike, like Amazon, and selling the small risky stocks. So basically, it's what they call risk-off environment, right? And then it accelerated on November the 8th when they thought interest rates are going to be rising. So and so basically we've gone risk on and risk off. And if you look at the Bitcoin chart, would you say that's the risk on part? And during the risk off part, it didn't exactly go down, but it essentially went sideways. The entire year of 2021, 2021, this entire year is actually a sideways consolidation. I know we've gone to 29, 30-ish area and then back up to 60 something and then back to 40s and 50s. It's just a sideways consolidation, right? And this is the date I'm talking about. When inflation came out, right, November the 8th, November the 9th, somewhere around there, November the 10th, that essentially started to decline. The stock market went very obviously kicked into a risk off period, right? Look at this risk. That's November the 10th. It accelerates with money going to Russell, leaving Russell 2000, going to SP 500, going to the big stocks, like what Brian was saying. And same thing here, risk off period. So that's essentially, you could see that in the stock market as well as Bitcoins. That's just something to keep in mind. Any thoughts on that, Brian?
Yeah, I mean, well, as you were explaining that, there were two things that came to mind. Number one, on-chain data does some funny things to Bitcoin price that a lot of people are mentioning in my chat. I mean, if you have a lot of Bitcoin moved off of exchanges, and let's be realistic about this, as institutions are getting in, many institutions are holding long term. They're moving their Bitcoin off of exchanges. They're hodling. And so that can make Bitcoin much more sensitive to price movements and to demand, whereas many stocks will quote unquote print more money, will issue more stocks into their circulating supply, into their shares outstanding. And so I do think that long term there's going to be a lot more upward price pressure on Bitcoin, which is obvious, guys, right? I mean, we've seen Bitcoin go from $10 to $100 to $10,000 to $60,000. So I would never bet against Bitcoin long term simply because of the economics of it. And this is the thing that, like, I try to talk to my dad about this, right? You know, my dad's very smart. He's, stock market guy. And he doesn't understand, and many people don't understand, that you can't really compare Bitcoin directly to stocks because of, the on-chain metrics and some of the supply being removed off of exchanges. So I think that's a really important thing to consider. The other thing to consider, I think, is that this, and this was actually Pablo's idea, not mine. But the lengthening cycle theory of, not expecting that blow off top as much, because as the market cap gets bigger, this is one thing that Pablo and I joke about. We talk about, like, our Wall Street buddies who, like, are already saying, like, yeah, you got to get into crypto, you got to get into Bitcoin. Like, who else is going to come in now and create this blow off top? It used to be that the blow off top was created by some media event or some media exposure, some explosion in Google search terms. People say, oh my gosh, look at this Google spike. It all of a sudden, there's so many people searching for Bitcoin, and everybody would be dumping their money into Bitcoin. But we've kind of reached saturation in awareness of Bitcoin, not in people holding it. I know that there's still only a small percentage of people holding it, but there's a huge awareness of it. And the market cap is so big that it's just going to be really hard for us to get that blow off top. I'm not saying it's not going to happen. I really don't know. But it's looking to me like what Pablo said about the consolidation of 2021 being accurate, that we're just sort of going sideways and consolidating, and it could be this sort of slow burn bull run that trickles over into 2022. And of course, that would be great for everybody, right? No one's going to lose a ton of money because their Bitcoin might bounce around between 40 and 50 and 60, but that's fine. You might lose 10, 20%. But also, that's when the smaller projects, altcoins, will really shine and do well, because for some reason everybody still decides that we can only invest in altcoins when Bitcoin is doing well. I'm really looking forward to that decoupling, where we say, okay, let's let these altcoins stand on their own. But a friend of mine actually had a really good point about that we need the price of Bitcoin to be high, not just psychologically so we can all sleep well at night investing in smaller projects, but also for liquidity, because Bitcoin is a liquidity pair for many of the other large cap blue chip cryptos that are then liquidity pairs for the smaller projects that everybody gets into. So that, I thought that was kind of an interesting point, that Bitcoin actually holds a really important role in liquidity.
Yeah, that's I mean, there's a lot of points there. The thing I would emphasize is this. Now, everyone, I think, is here to one, for the land sales, and Adam Dem, the founder of Victoria VR, is coming on in about 3 minutes. Just in that last 3 minutes, here's the money. The money. Everyone wants to know, where's Bitcoin going next? Where's Bitcoin going next? So here we go. In 3 minutes, I'll try my best to give you my analysis of where I think Bitcoin's going next. So let's look at it from three different perspectives, right? With Bitcoin, we basically have, we basically have, we look at three things: technical, on-chain, and fundamentals. So from a technical point of view, it's pretty simple. You go higher high, higher low, higher high, kind of a higher low, but the pullback was a bit further than what we were anticipating. This line, if you've been watching my videos, I have been emphasizing. So again, since the COVID crash of April 2020, see how this line has held all this time until it broke recently. That's not a good sign. I mean, it's been holding for 18 months and then we broke that line. So from a technical point of view, yes, we're holding a higher low, barely, but barely holding higher low, higher high, higher low, but barely. And it broke that long-term support line. I would say that's 50-50 from a technical point of view. Now, from an on-chain point of view, I'd like to share this with you guys. Yeah, check this out. This is what they call the all exchanges to derivative exchanges flow mean. Now, what does that mean? It basically means from all the exchanges like Binance, Coinbase, Kraken, going to derivative exchanges. Derivative exchanges are like Deribit. It's basically where options trading and where futures trading happen. Flow means how much money is going into from spot into derivatives. Mean just means average, 30-day moving average. Just think of this as a 30-day average of the money going into Bitcoin futures trading. Now look at this. This is 2019 at the bottom. There was so much money going in. That's whale money, right? That marked the bottom and we went up. We went up there. There's very little money going into futures. That means whales are not going in. Retailers are buying. So it's distribution. Then we came down. Then whales came, a lot of money came in, not a lot, but higher than here. Some small whales came in, and so that drove up the price again. And this is the COVID crash. No one could have predicted this. So this was still a valid signal. Without a COVID crash, it probably went higher. And the whales came in. Look at how high that is. That's higher than anywhere else you see on the chart. Whales came in again right after the COVID crash, and that set up this massive bull market. Whales left again. Retails came in. A small sell-off. I mean, that doesn't look like much on the chart, but that's actually like a 30% sell-off because this is a logarithmic chart. Now, basically, whales came in again, and then boom. This is the April, March area earlier this year, and again at this height, whales left. Only the retailers were coming in droves into the futures market to gamble. And look at this. This is the lowest we've seen in the chart for quite a long while, for 18 months, and that marked the top, right? So then the crash to 30,000, and then it hit 28,000, 29,000 around there, and the whales came in again. Not as high as these two instances, but still high enough to give us the push up to 69K. And then it falls back to 42K, 45K area. Are the whales in? We've just seen this. You can take a screenshot of this if you want, because this would probably be a helpful chart to you. Are the whales in? I'd hate to be, people are like, oh, Pablo, you're such a bear, you know, all this and all that. I just want to give you the facts. This chart could be wrong. This may not be 100%. Where it is right now, there should be a ton of whales coming and going, yeah, let's buy the hell out of this thing. But that's not happening right now, right? Maybe if we get a pullback even further to say around high 30s, low 30s, then we might see, you know, in the first quarter, then we might see the whales coming. I'm not saying it's going to go down to the 30s, but I'm saying, what would it take for the whales to come in? Why are the whales spooked? It's pretty obvious. I just showed everyone the whales are spooked because inflation numbers came out here and they just sold off. Inflation numbers came out here and they sold off again. So basically, okay. So we've just analyzed the technical, and I say it's 50-50. We can go for a short-term bounce into maybe mid 50s, but I don't think we're going to take out that old high of 69K. Second, we look at the on-chain. I think the on-chain supports us for a bounce, but not a major move up above 69K. More of a bounce to say to say around, say, maybe high 50s. So, and then you look at the fundamentals. Give me 1 second, Brian. Can you take over for 1 second? I just need to reply
Sure.
to Adam.
Yeah. Yeah, I mean, and that's why, you know, we're seeing so much caution in the market, because there's signals saying, you know, it could go either way. And I think this is also why projects like, you know, Solana and AVAX are doing so well, because people are aware that those projects are probably still early, and they're going to do well over the next 1, 2, 3, 4, 5 years, which I think is very smart thinking. You know, I have a friend that got into Luna and went really, really heavy on Luna, and he's a Luna whale now. And I'm like, good job. You know, that was a smart move.
Wow.
And yeah, there's
You know what, Luna?
yeah, he's a Luna whale. I'm not.
Oh man. What would have happened to Brian is Brian would have been a Luna whale when Luna was at like 30 cents, and then when it got to like $1.50, he would be like, 5x.
Yeah,
That's Brian.